All right, investors. In today's video, let's analyze Palantir Technologies shares. They were mentioned a lot these days on social media. And if we see 1 week's return, they made more than 13% return. Yes, 1344 in 1 week. And today, let's analyze those shares. We will be calculating the stock target price. As you know, there are three different models for calculating stock target price. It's a DCF, discounted cash flow, where you discount company's cash flow, calculate terminal value, and then calculate the stock target price. But this is the long process. Also, we have a DDM model where we do forecast company's dividend, then use Gordon or Pratt model for forecasting the company's dividend for next years, and then they calculate the stock target price. But this model is not used often because not all the companies are paying dividends. And another model is price income or multiplicators model. As you can see here, of course, I made it easier. Ideally, you have to compare with industry averages, with developed country and developing countries averages together with peers. But in this video, let's simplify it. Let's only compare with peers and calculate the stock target price using different financial ratios. So first, I've already have prepared this Google Sheets table. You will need to install financial modeling prep add-on because we will be using financial modeling prep, and also you will be using the Google Sheets. I will put the link on to this video, down to this video, for all the materials and all the links on how to install Google Sheets FMP add-on, how to register with financial modeling prep. And also I will put the link to another video where I explain in more detail how to calculate stock target price using this amazing model. So let's start. First, in this simple Google Sheets table, we type the Palantir ticker, stock ticker, PLTR. And as you can see, it is already here. The formula is simple, FMP key metrics, TTM. TTM stands for trailing 12 months. And then this L4 is simply our cell where we inputted the Palantir shares. There is another formula as well for the stock market price. This is the real-time price of Palantir shares, $43 right now. And as you can see, we extracted 10 ratios. This formula over here, it is extracting all the essential company ratios. And from here, we've selected 10 vital ratios. As you can see, we have the liquidity ratio over here. Then we have the price multiplicators like price to free cash flow ratio. Then we have the profitability ratios. Again, I've written an article on different ratios and how to use them. I will put the link down to this video as well. And if you see, for example, ROIC trailing 12 months, there is a formula, and we are extracting the data from this table over here. And as I have said, we extract 10 important ratios from this key metrics that we used in the formula. So the next step is to get the averages for competitors. In this table, let's take 4 company averages. How to take companies averages? You go to financial modeling prep website. After you obtain your custom API key, in the search bar, just type peer. This one, stock peers. Choose the stock peers, and after that you will see this field, stock peers API. Simply click on it, and you can read the detailed description, the inputs that you need to put. In this case, we need to put the ticker. This is the full endpoint. As you can see, the ticker, if you click on this endpoint, over here we have Apple shares, but you can replace it with your own ticker. As you see, there is a custom API key. Obtain your API key after you register with financial modeling prep, and then you just have to replace it on Palantir shares. So I put PLTR, hit go, And now we have closest peers for Palantir. We have the CrowdStrike, we have Adobe. Let's put four of them. PANW, PANW, CrowdStrike. What else we have? Adobe and SQ. As you can see, there is a formula, the same formula as we used here, and it is already extracting key financial ratios for trailing 12 months for the tickers that we indicated. And then we calculate the averages. As you can see, the averages, it's a simple formula. We take the averages from the peers to calculate the average number. And so we have important financial ratios for our company. Then we have the averages for our closest peers. And here is the weights. Since we have 10 ratios here, the weight for each ratio is 0.1 or 10%. This is your assumption. This is up to you what weights to put. But if you think that return on invested capital, for example, is very important to you, you can put higher weight here, but then you should put lower weights to other ratios. And sum of all the ratios should be equal to 1. Don't forget it. You can have 3 ratios, you can have 10 ratios, 20, but the sum of all of those weights should be equal to 1. And then we simply compare the averages for competitors with the company and multiply it by the weight, and we get this coefficient for all the ratios. Well, here we have error because company is not paying dividends and peers as well are not paying dividends. And as you can see here in the formula, we divide it by dividend yield of the competitors, but we cannot divide by 0. That's why it is giving us error. To avoid this error, we simply can put 0, like over here. We just replace formula. You can see in upper left corner 0. And now we avoided this error. Let's ignore this coefficient. Let's not replace it for now. Ideally, you have to replace this coefficient if the company is not paying dividends. You have to replace it, take another ratio from here, calculate averages for peers. But let's not make this video too long. And I just put 0 here, but ideally you have to replace it with other ratio. And then you calculate the coefficient, which is the sum of all the ratios, and coefficient is equals to 0.93. Then you take the share market price that you extracted using the FMP real-time price API endpoint. And the price is 43. You simply copy it from here, 43. And now what you do, you simply multiply this coefficient by the current market price, and you get the stock target price of 40. That is a 6% decline potential. And based on this valuation model, very simple valuation model, Palantir shares look overvalued right now in comparison to its closest peers. That's how you can undertake equity valuation using this very simple model and financial modeling prep data and Google Sheets. I hope this video was helpful for you. Thank you very much for watching.